What is good, Tesla family? It's Ray J back with another video, and in this one, I'm going to be talking about the one and only Tesla stock, which you should be looking out for the future. I'm also going to give you guys my future forecast for Tesla just for the near term, based off what is going on with the Fed and also the election cycle that we typically see for the SPY and the markets. I'm also going to break down what's going on with Elon Musk, as we do have some major tweets that came out from him involving a big Tesla update. Now, before I break anything down, though, before I get into any more details, I do have to mention a couple of things before starting. Firstly, I'm not a financial planner, so don't take any of this as financial advice whatsoever. And also, if you guys can, please smash the like button if you want to see more videos like this. Not only benefits me, it benefits the entire Tesla community as a whole. And the last things, if you guys can, please check out the Webull link down below and in the description. If you sign up for Webull, the link down below, and deposit any amount of money into the account, you're guaranteed up to 12 free stocks, each worth up to $2,000. And the best part is, any of these 12 free stocks could be a free Tesla share. It's a limited time offer. The offer ends in just 2 weeks, so please check it out before they run out. With that out of the way, let's get on with the video. So looking at Tesla, we're actually down about 0.13% for the day, when SPY is actually down 0.76%. You guys can see something very interesting right here. You can notice that in the beginning, we actually had a gap down in Tesla, right very close to where our previous support should have been. We actually came below it. And what you'll notice is actually SPY had a bigger gap on the way down, but it actually didn't drop as hard after that. Now, Tesla did have a bit of a drop after that. It's about 295, very similar to how SPY came down. But Tesla actually did something very different. There were lots of shorts that really piled in. We did see a big increase in the short volume. I can actually show you guys that just for like a second. Right here, we have the short volume. You guys can see this big spike that actually came out as the shorts really piled in with lots and lots of open interest. And as a result of that, it didn't actually work out for them. They actually got kind of trapped and kind of faked out. So this big drop came. People thought Tesla was going to crash, and instead we got a big bounce, and Tesla pushed, filled the gap, and it almost went green for the day. So pretty interesting stuff, despite what happened to SPY. SPY came down, it did push up a bit, but it did not push to the same degree as Tesla. So that really shows lots of relative strength for Tesla compared to the SPY. Now, when we look at other pieces of data, you'll notice right here, we're actually seeing a big increase in the price pairs ratio, which really shows how Tesla's really kind of diverging in a way and showing a lot more strength than before. And right now, we're finally starting to see a clear difference, in their trends right now. You can see right here, Tesla's starting to trend a little bit higher compared to SPY, but I wouldn't necessarily say that Tesla's in the clear just yet. Now, big analysts out there are still saying you should hold on to your Tesla shares, as Needham has given Tesla a recent hold rating. So we are seeing big improvements from that end. However, the reason why I'm not super necessarily bullish for the markets just yet is because we do have important data to discuss. Remember, CPI came out at 8.3% overall. This was actually kind of offset by energy. We could see energy actually ended up going down a bit, and that's what actually brought the overall number down. But everything else, from food to other items to utilities to storage, all these things actually ended up going up, which is why it still is a concerning issue and very important for the Fed to really get on top of this. So right now we have the FOMC meeting on the 21st of September coming up. I mean, it's actually between the 20th and the 21st, but the 21st is the bigger day when we actually get the rate hike announced. So that's going to be very, very important. Now, when we look at the latest countdown, right now the market is fully priced in a 75 basis point rate hike from the Fed, and we are still starting to price in a 100 basis point rate hike. Now, do I think we're going to get 100 basis points? I think it's actually quite unlikely the Fed goes that hawkish, especially when you look at Jerome Powell's history, but I can't necessarily kind of rule it out as impossible. It still is possible, just pretty unlikely, but we should all be prepared in case Jerome Powell does end up doing something like that. Now, it may not be very positive for the markets, but once we see this number, this is when the market will get a lot more confidence, as we don't actually have an FOMC meeting for October as of right now. So now I want to talk about something else that's very important, and that is the current cycle we may be in. So if you look at all other years for the markets, September tends to not be the best month. The market tends to take a hit. But if you look at midterm elections, because remember, this is a midterm year, this means that between 2020 and 2024, obviously we have the presidential elections. In between those, we have the midterms. That's when the entire House in the USA does get reelected, and then 1/3 of the Senate gets reelected as well. So anyways, when you look at the data, you'll notice September tends to not be the best of months and the market tends to take a bit of a hit, but this could continue as we approach October. We could actually see some sideways action as well. But as we approach the big day, which would be the election day, it would be a lot better for any political party that's in power right now to see the market kind of rally. And that is what tends to happen during these election years. So, am I guaranteeing that this will happen? No, I can't promise anything. Nothing in the market's guaranteed because there are alternative circumstances that could affect us. But I do think it's very likely based off historical data. Now, with that said, I want to show you guys something else. So, if you look at these two dots right here, all right, we have a purple one, we have a yellow one. Imagine these are two political parties. You have to note that during recessions, if there's one party in power, let's just say it's the yellow party, let's just say that the economy is not doing well, something bad happens, it's very likely that during these recessions, during these elections that happen to be during the recessions, we get a big switch and we start to see a lot of seats kind of flip in the direction of the opposite party. Now, if it's the other way around, the same thing will most likely happen. It's the same vice versa. If the purple party controlled everything from like the presidential branch, the legislative branch as well, when it comes to Congress, it could also flip to the other side if we are in a recession. And right now, it does look like the market's not in the best of states. So to increase the odds of less seats kind of flipping to the opposite party, it really works in the favor of those politicians to actually pump the market as we approach the big midterm elections, which are going to be during the first week of November. So that's why I think it's very likely we will get a bit of a pump during that time frame. We could get a big move during then. It could even come sooner depending on the FOMC meeting, but right now the market is kind of on the edge and very apprehensive about what is going to be announced, which is why next week is going to be very huge. Now, so far Tesla's holding up pretty darn well, but I'm not necessarily fully convinced we're just going to continue to rally and just like kind of squeeze from here. I'm still very, very cautious when it comes to the price action because even though SPY has the potential to maybe push up and fill this gap, I don't think we're going to see an end to the choppiness just yet. And we could see lots of fake outs still and lots of shorts still continue to pile in alongside many sellers going into FOMC, which is why I'm still very cautious. Now, if you look at Tesla, as of right now, we did actually make a lower low, and I wouldn't really say this is the high as of right now. We have to see how this really moves on Monday. But if this is the high and we do start to downtrend from here, we would technically make a lower high. So we could actually respect a bit of a downtrend going into FOMC. Now, if we do get a 75 basis point rate hike, please note that the market already priced that in. So it's very likely the market will respond more positively to it. So we could see some chop maybe going after it, but it won't be as bad. And as we approach the month of October, I would say later into October, historically during, let me find my chart right here. Sorry about that. Historically during these election cycles, guys, as we approach like the second week of October, maybe a little bit later, the market tends to actually rally. Maybe it could happen sooner than that. So I just wanted to kind of inform you guys about this sooner than later. And also note that we have AI Day coming up in a couple of weeks for Tesla too. So my current view is I anticipate more chop to really come. I don't necessarily think we're going to have one set direction. I don't think Tesla's going to rip or just like crash. I think we're going to basically chop for the next couple of days once we have the FOMC meeting in play. And we're going to react to what is announced afterwards. Because once again, if we get 75 basis points, the market is most likely going to eventually start to rip because we already priced that in. If we get 100, which is less likely, the market could still take another hit because we haven't fully priced that in. I know Jerome Powell does not like to do that, but historically, when it comes to these CPI readings being very high, with inflation being this high, a more hawkish Fed could actually, have a more bigger effect compared to before. So, anyways, when it comes to support and resistance levels, let me actually show you just Tesla now. I'm going to be carefully watching what Tesla does right here. So in my previous videos, I mentioned that 295 ranges where Tesla may have support or resistance depending on where we are. Obviously, we came down and we got a nice bounce off 295, almost perfect compared to what I said. We got a big bounce. We pushed through a resistance right here. And you guys can see right here as we approached that 300, we had some chop right here, but we managed to break through it. We got lots and lots of buyers coming in. They really did fake out those sellers, those shorts as well, and we got a pretty nice move I wouldn't necessarily call this a massive squeeze. It was just a tiny squeeze, maybe if you want to call it that. And despite the quad witching that ended up happening, Tesla made a pretty decent move. I think we filled a gap up here too, or we came very close to doing it. Once again, pretty nice move. However, we're going to have to watch and see how it really continues from here. So that's why you have to watch support and resistance levels and be ready for what SPY ends up doing. So for Tesla, right now, the support that held us up was about 300. If we drop below that, watch for a bounce at 295. If that doesn't work out, we have the potential to come all the way down to that 290 range. Now, if Tesla does try to push to the upside again, we have some resistance at 305. If we break past that, then 309 is what I'm going to be watching for. It is possible for Tesla to get there, but I think it's a little bit less likely because of the FOMC meeting, but just be prepared for anything and watch these levels very closely. Now, the last thing I wanted to talk about is something Elon Musk also mentioned that's very important. And he mentioned that the beta is expanding to safety scores above 80 after the new update goes out. And this is very good because they are really opening up a safer version of the beta to more people out there that have lower safety scores. Now, some people out there may have different views on this. The bottom line is there's going to be a lot of FUD coming out very soon. A lot of people are going to be throwing hands and just doing whatever they can to attack Tesla about this. But you have to remember, this is just a beta. So as this improves more and more users will have the ability to actually try it out. And I personally think it's still a very amazing step in the right direction. The only issue that I'm seeing with the markets is right now we're not moving based off fundamentals. Fundamentals aren't playing the biggest role. It's more about what the Fed is doing, and the market tends to move in unison. But despite that, because we're getting lots of hold ratings, lots of buy ratings from many analysts, we are seeing lots of buyers stepping in, and Tesla's showing some very nice strength as of right now. So with that said, guys, I'm not as bearish on Tesla as I am for SPY, at least for the near term. I wouldn't say I'm even fully bearish on SPY. It's more like just chomp and moves between the different directions. So with that said, guys, remain calm, cool, and collected. Do what you have to do. Watch support and resistance levels and pay attention to your indicators because the next few days may still be kind of crazy for Tesla and the markets until we get to that FOMC meeting. Anyways, enjoy your weekend. Remain calm, cool, and collected, and I will definitely see you guys in the next video. Tesla to the moon because the long-term future is bright, and peace out.